Knowledge is power. Make an impact by learning more, or hire us to do it for you. Let us focus on what we do best so you can stay focused on what you do best. Find all of our options under services, one-to-one training, subscription-based training, or accounting and business consulting.
Who's in charge? It goes back to who's in charge.
Yeah, exactly. Who's in charge?
Around here, I wonder if Dwayne's going to come. He's super close by.
Dwayne who?
Dwayne, he doesn't come to this group, huh? Does he only come to Dina's group?
Yeah, he's in my group. I think his last name's Johnson.
Oh, Dwayne Johnson. Okay, yeah, I know who he is. When you just said Dwayne, I'm like, Dwayne Wayne?
Yeah. Oh, yeah, I just noticed he hasn't come here.
Remember Dwayne Wayne? Am I going to get in trouble for this?
You're not streaming yet.
I'm about to. I'm in the process of going live. I just didn't tell you. I'm doing it behind your backs.
It's recording now.
Recording.
Surprise, surprise.
It is recording. I did start that process.
We don't know.
So I want to say that today is Wear Red for Women. It's Women Awareness for Your Heart. This is a subject that is close to my heart, both literally and figuratively.
Oh.
Why is it close to your heart, Dina?
Well, because it's an issue that is starting to affect me. I'm going to the doctor, so I'm trying to lower my blood pressure. I am dealing with things now, being older in life.
Gotcha.
Well, I wish you well.
Thank you.
Yes.
Thank
Prayers
you.
for Gina. That everything should be healthy and wealthy and wise.
Hope the road sanders get out there first, because it's a little bit chilly. There's some icy spots.
Could be in Chicago.
Absolutely. We've been in the deep freeze.
Yeah.
All
At
right,
least
everybody.
we have 2 digits today, and one of them isn't a minus sign.
All right, everybody. So I have good news. We actually are live. Good morning. Happy Friday. It's February 1st, 2019. January's over. 1099s are all done, right?
Yay.
Maybe.
Got them all done, filed.
Maybe.
Or they're late.
I'm waiting for them to come out of the woodwork. Oh, I forgot.
Yeah,
Well,
that's coming.
we've had our share of those who we've followed up with more than enough times, and I said, okay, that's all we can do.
Exactly.
We follow what we
Exactly.
have, we leave what we
Late
can't.
penalties for that?
What?
Are there late penalties?
There can be. I've never seen it happen in my experience, but I know people who have.
How about if it's time stamped at the post office?
I think it's
Time
too
and
late. It
date.
had to be done by midnight last night. So, pricing and performing a cleanup job, huh? Let's talk about that another time. Let's talk about something else today. It was
I
like,
think it's very appropriate for today. I mean, I'm getting all kinds of people. Oh, I just didn't have a chance to do my books all year.
yeah, all year. Great. Give me $6,000 and we'll put the year together for you.
Hector,
I'm not
do
kidding.
it.
The reason I chose this subject was because it was being discussed. I saw it discussed in our group, Between Well and Main Strategy Forum. I'd seen it come up elsewhere as well. And I said, all right, this is a good and timely topic. This is the time of year when we get the cleanup jobs, right? Because that's when everybody wakes up and realizes, oh, crap, I've got a tax return to file soon. And I didn't do my books all year. I forgot to do my books.
All year long.
Oops. And so, and that kind of goes to the first question. So, and I'll show you kind of the process that I used to use to price it, because I know some of you aren't going to be satisfied with my current method of pricing it, so that you can have a sort of formula to follow for how to come up with your price. I've demonstrated this before. I'm going to do it again today. And then I want to get into how to get the work part of it done really quickly. So first of all, let's just get this out of the way. I hope nobody's still thinking about charging by the hour for it, please. No, if that's what you do or want to do, you're going to be disappointed with today's discussion because it's not going to include charging by the hour. I promise. I got some people to let in here. Let's let some people in. Let the bodies hit the floor. All right. Got some more people here. Alive and thriving. We have one phone call listener. Somebody's eavesdropping on our conversation.
Is it Astrid? She said, I'm in listen-only mode. Hi, guys.
No, but she's here. She's here. She's got her little video thumb there, indicating that her camera's not on. So let's do something. I'm going to share my screen. And if you're watching live on Facebook, bear with me because I am not going to be able to check while I'm doing this very easily.
I'll help you out, Seth.
Thank you. Let's just Google Cubio test drive. We'll use the sample company file for this part. And I'll show you in pretty short order how I go about it. And where am I? Let me get my other windows up. There's that. Okay. All right. I've got the live Facebook feed on my other screen too. But yeah, Gina, look out in there. And if people have questions, let me know. You know how it works. Just stop and interrupt me.
I'm good at that.
Otherwise, I'll go. I'll spend the whole hour talking in a single breath. So, and I wanted to look at some of the other questions that were asked during registration because it all kind of ties in. All right, let's get to the important one first. Linda wanted to know toilet paper, over or under? I want to say over, I think, is what I'm inclined to, right? It just tears off more easily that way.
It's over.
It's over.
It's all
It's over.
Over it.
That's why I got divorced the first time. No.
Over, yeah, I'm sure.
He was an under guy.
You know what? It's always the little things.
That's it. It was the teeth brushing and that, so
Yep. Something you just never got out of the way during the dating phase. All right, so clean up task list in order as best you can. I know they're all different. That was Jesse's comment, so we're going to actually talk about that. Do you use a checklist or a template to determine the pricing of cleanup? That's from Catherine. So that's exactly what I'm about to show you that I used to do. And the quick answer to what I do now, and I said this in Facebook, is I simply charge $500 for each month that needs to be compiled. So if it's a whole year, it's $6,000, right? 12 months times $500 a month. That works for me. That always gets me paid plenty, especially because I have processes, systems, and technology that I'm going to use to get the job done efficiently, right? And that's what I'm going to go over in the second part of today is how I get that job done very efficiently, right? Because again, it's not about the hours, and that's why, by the way, we don't charge by the hour, because if I was charging by the hour, I'd make nothing on these cleanup jobs because I can get them done super fast. But as I said in our Facebook feed, when it came up with my friend Charlie from the UK, he was talking about how many transactions. And I said, I've never wanted to deal with I used to always cringe even years ago when people would talk about how they count up the number of transactions that are posted every month and they come up with like a fee. It's like, no, too much work. That's way too hard for me. I'm lazy. I don't like to spend time on stuff like that. So I don't care how many transactions there are. And as I pointed out, nowadays, it doesn't matter if there's 300 transactions or 1,000 because it's going to take the exact same amount of time to import them. It's going to be the same 2 clicks to import those transactions into QuickBooks Online. So I'm never going to do anything based on number of transactions. It doesn't matter to me.
Can I start with something?
Please.
I want to start out with, before I even get to checkoff lists and spreadsheets and all of that stuff, I talk to them and I ask them why. Why do you want this done? I mean, that's a really important question. Are they simply looking to get their tax returns done and want somebody to plow through this as cheap as possible? Or do they want it done right?
Interesting. So that makes sense. I guess the reason I didn't even think to go there is because usually when I'm doing a cleanup job, I'm the one who's recommended it was needed after I've had a look at their books, usually with them.
But if they're not on board with it.
If they're not on board with it, there's nothing I could do for them, right? Can't help somebody who doesn't want to be helped, right? And so, but speaking of that conversation, if all they do want is just enough to get a return done, I'm still going to charge the same. I don't care. I'm not going to gauge my pricing based on why they want to do it, because I still have to do it and I still have to do the work. And when I do it, I'm going to do it just as thoroughly, whether they want to actually use the information for analytics or just to get a tax return done. Because the way I look at it, I have one way of doing this. That's it. I don't care what they want to do with it. I care that I'm going to be extremely thorough. I got into it with a client this week because he was like, why are you making this so complicated about the 1099s? My previous accountant just sent them out. It was no big deal, because I said we need the W-9s, the whole process. And so I said to him, I don't know what your previous accountant was doing. I don't care what your previous accountant was doing. We do it the way we do it because we do it right. Plain and simple. And
and that's my point too. If the why is not proper, in the end, they're not going to be happy paying my fees. They're going to be unhappy. I'm going to be unhappy, not getting paid. And to me, I don't even want to walk that path.
Fair enough. I guess my thinking is, when I give them my fee, they better be serious about what they're going to do, because I'm going to charge them, $6,000 to compile a year of books. And that's assuming it's a fairly simple deal. If it's a company with lots of inventory and manufacturing, you better believe it's going to be more than that. When I say $500 per month of cleanup, that's for a basic company. And Charlie in Facebook was like, oh, that's a lot. What if they only have a few hundred transactions? And I'm like, again, I don't care about the number of transactions, number one. Number two, $6,000 for a year of bookkeeping is nothing. It's ridiculously cheap.
Absolutely,
and I think that's
it is.
a problem I see in our industry as a whole, is we have this sort of, what's the word I'm looking for? It's almost like a poverty mindset that we have in this industry as a whole, right? We just think really small, and we need to start thinking big. We need to think about the fact that if they wanted to hire a bookkeeper to do it even part-time, would probably be $20,000 for the year, right? So $6,000 is a bargain as far as I'm concerned on a very small company even, right?
And another way to look at it is, what is your minimum rate per month that you'll charge your client times 12? That's what you're charging.
As Lauren Fogelman pointed out, because she was involved in this thread too, and she's obviously paying attention, she noticed $500 per month is my minimum monthly fee for doing any kind of bookkeeping work. And that's precisely where that comes from, because I'm going to spend the time to put the books together, whether it's current or in arrears. The truth is I should be charging more for arrears. So again, at $500 a month, it's a bargain, because doing work in arrears is more work because I have to go hunt information down. Whereas doing it currently should be less work, because I should have my system set up to get what I need when I need it and have everything in place so that it shouldn't be nearly as difficult once things are caught up and cleaned up, right? So
I had a client that one time I did a job for like $1,000, and then I tried to hook him into doing the service through the year, and then he came back to me the next year, and I said, this would have been so much easier, and I charged more. And he's like, well, I don't want to pay all that money a year because you just did the whole year for $1,000. And I'm like,
exactly.
No.
You created a perception of value that was far below what it should have been.
Right, exactly.
And that's the point. I mean, I had years ago, I've told this story a number of times, so I'm sorry if you've heard it before, but I had a client come in. Excuse me, it wasn't even cleanup. There were no books. I had to construct the books from nothing. And we agreed at that time, I think I charged them $350 a month for the cleanup, something like that. No, it was even less. No, it was $350 a month. That's right. And then when we were just about done, we got to the point of, me saying, okay, I've got it pretty much together. We need to schedule a call to review the stuff. And before we got on that call, he asked me, okay, what are you going to charge me going forward? And I said, well, I'm going to charge you the same. I'm going to charge you $350 a month. And he said, well, why would you charge me the same as what you're charging to clean it up? And I made the same argument I just presented to you all, which is that if anything, I should have charged you more for the cleanup. I gave you a deal on the cleanup. This is what I'm going to charge you going forward, because this is the least I'm going to charge for anything that I ever do. And so he was a little resistant, but bottom line, we got on the call and I reviewed his books with him. And this is powerful, so pay attention here, because I got on Zoom, shared my screen, went through his balance sheet and P&L, and by the time we were done with the conversation, I didn't even have to bring it up. He said, Seth, I'm good with the $350 a month. I probably could have gotten more, and that was a long time ago. Like I said, now it's $500, bare minimum. And that's the one of the ways, Gina, I think that you can weed out the tire kickers, right, who really won't value it. Because when you throw a number like that out of them, and especially when you throw it out, and there's a lot of psychology to this, when you throw it out without hesitating so that you're clearly firm and this is what I charge and you're not going to falter, You know, some clients or prospects will test you and see if you'll back down. The fact that you don't gives them a perception that, oh, this person must know what they're doing because they're not budging on their rate, right?
And I did that one time, and their phone literally dropped out of their hand.
What? You did what?
Gave them my rate
Mm-hmm.
and didn't hesitate, just like that.
Yeah.
And his phone, and the phone actually literally dropped on the table. I could hear it fall out of his hand.
Good. That means you did something right, right? Absolutely. If that's not happening, then you're not charging enough. Like what I say in 97 and up, when we have this pricing conversation a lot, and this seems to go over really well. This seems to resonate really well. The price you're asking people for should make you slightly uncomfortable. You should be a little bit afraid to ask for the amount of money you're asking for. That's when you know you're asking for the right amount. Because then what happens is, as soon as somebody agrees to it instantly, guess what? Your confidence boosts, because now you're like, oh crap, I could have even asked for more. And now you're no longer nervous asking for that amount. You're an entrepreneur. You want to give yourself a raise. That's how you do it, right?
And I want to say that if you don't start high, you have nowhere to go. If you give them the bottom line rate to begin with, you have no negotiating power.
Yeah, but then don't negotiate. Just give them a firm price and say, this is it, right? Because again, if they start trying to negotiate and you falter and start questioning it, it makes you seem less secure about what your value is, right?
And that sets the tone for your whole engagement, the rest of the engagement.
It also sets the tone for their perception of how valuable you are, because again, they're only going to value as much as you value yourself, right? So there's a lot of reasons why it's really important to stand very firm on your rate when you present it to the client and say, this is what I'm charging. You know, it's almost like, this is sort of classic sales. If you've ever had any sales training, you know, when you close somebody, which basically means you're asking them for the order, which basically means you get to that part of the conversation when you tell them, and here's what it costs, right? As soon as you have to say it firm and you have to say it fast, and then you have to be quiet. Right? Because in sales, they say at that moment in the conversation, the next person who speaks loses, so to speak.
Well, my next comment is, I'm good, not cheap.
Right. No, and if people start balking at my rates, that's the first thing I say is I say, look, I'm not the cheap solution. I'm the guy who's going to get the job done right the first time.
Exactly.
There's a pro advisor out there that's, I can't remember what his name was, but he actually sells the cleanup work with, I'll do the cleanup work for nothing, but then this is what you have to sign this contract for a year and then actually 2 years. So he just puts the price of the cleanup into the year, and he's supposed to be very, very successful with it.
I just, that idea makes me very nervous, because somebody could cancel the contract. He can't force them to stay in the contract.
Right.
You know, unless he gets paid for the whole contract up front.
Yeah, I think he puts it into the pricing. So I heard that and I was like, I think Matthew and I talked about it. I was like, wow, did you hear what, so I can't remember who it was though, what he does. And he says he turns it over really fast. Somebody in New York, and that he has them sign the contract with it's obviously padded in. But I'd be afraid too, because I like to have when I do my contracts, somebody doesn't like my service.
The only way I would do that is paid for the full year up front, non-refundable.
Deposit.
Yeah. No, and by the way, so when I do quote my $500 a month, and I say that's, you know, what it's going to cost $6,000 to do a whole year, they will have to pay. Usually I ask for payment in full up front. The only thing I'll negotiate on, if they balk at that, a lot of people, you'd be surprised, just say, okay. And I send them a link to click to make a payment, and they pay the whole thing. If they balk at all, then I'll agree to half up front, half on completion. That's it. You know,
in my engagement letter, engagement starts upon receipt of deposit.
Mm-hmm. But how much is that deposit relative to the whole contract?
Well, it depends on what the contract is and what type of work I'm doing and that kind of thing.
Right. See, in my case, if it's a cleanup and I'm giving them a flat quote, I need at least half up front. Otherwise, I'm not going to do it.
I try to get the whole thing, and then if they complain, I'll go half.
That's exactly like I just said. Yep.
Yeah.
I ask for the whole payment in full. I don't even question it. Just like I'm firm about asking for the price, I'm just as firm about saying, okay, here's a link, you know, make your payment, or I'll invoice them for that, because that's not going to be recurring. So usually I'll invoice them out of QBO, QuickBooks payments, invoice them for the full $6,000. And I tell them once I get payment, I'll get started. And if they balk it all, then I'll say, all right, half up front, half on completion.
And they have a credit card. They can make those payments over the months.
Exactly. Yep. They can pay the credit card monthly, not me, and pay the interest. I don't get to charge interest. I mean, we could, but that gets even more complicated. More complications I definitely don't want to deal with. So, anybody else? Questions, thoughts?
Ask the other Linda.
Matthew
I
is Linda.
usually mean to charge him up front, but end up charging him at the end, and it doesn't work so well that way.
Never does, because that's when because then they have the leverage to sort of complain and say, oh, I wasn't. I mean, I'll never forget years ago, I had a client. This was years ago when I was billing by the hour and billing in arrears, of course. And this guy for months just dodged me. And finally, I guess he got tired of me getting more and more aggressive about my follow-ups because it was like a few $100s. It was like, what gives? Just freaking pay the bill already. And then, of course, when he finally does respond, then he's got, oh, well, I really wasn't happy with the service and all this BS. And I told him point blank, I love calling people out on their BS. And I told this guy point blank, I said, if that was the issue, you should have brought it up a long time ago, not now. I said, now it's too late. I said, I'll tell you what, I'm going to write it off. If you feel like you want to send in a payment, you send in a payment. If you don't send in a payment, don't ever call me again. And that was that. I don't want a client like that, ever. It's worth losing the $300 to know that I've made it clear he will never get to do business with us again. So, be firm. My suggestion is you charge whatever your normal monthly fee would be to do a simple set of books. That's what you charge for the cleanup job, assuming it's a simple company, right? So, a lot of people asked in registration about a checklist, right? And I've said this before, and I'm going to say it again. The checklist is already baked into your accounting process. It's called, can anybody tell me what the answer is?
Balance sheet.
Thank you. The balance sheet is your checklist. That is our product. That's our work product. That's our output. When we're done with a set of books, when we're done cleaning up a set of books for the month, for the quarter, for the year, the ultimate output of that work is the balance sheet. Yes, the P&L comes with that. I get that. But the balance sheet is your checklist. If you've ever gone through the process of performing an audit, that is essentially what you're doing. You start off by sending out bank confirms because you want to confirm that the bank balances are accurate. And in the case of an audit, you're doing it with the bank because you trust them more than you trust the business owner, right? You trust the third party, not the people who compiled the books when you're verifying these kinds of numbers. So we're not going to go to that extent. We're not going to send out bank confirms, but we're going to get the bank statements and we're going to check that they're reconciled to the right amounts, right? Or, as in the case of the cleanup job I've gotten most recently, and I started on it early last week, the books were so bad, I went into Sassant and I deleted every single posting in the entire set of books, and I'm starting all over again. It was so bad because the books, it looked like, were not reconciled, but everything looked like it had been downloaded and coded like throughout a good chunk of the year. And my first test, because this is a company who sells on Amazon, was I said, let's log into your Amazon account. Let's pick a settlement report at random, which we picked one from March of last year. And I brought it into my Amazon template, which in 2 clicks cuts it up into gross fees all the way down to the exact net amount that was deposited into their account. And I said, go to your bank statement. Let's confirm this amount shows up as a deposit on your bank statement, the third-party document that I can rely on. And he looked, and sure enough, it was there. I said, great, let's go into your check register in QBO, and let's find it. And sure enough, it was not there, right? And all the other March activity was there. And we did a few more tests like that, came up with the same or similar result. And I said, okay. And mind you, this was a client who originally hired me just to help him. And at that point, and having spent not quite a half an hour looking at stuff, and this goes back to how I usually get my cleanup jobs, is because at first I'm usually hired to just look at it with them and help them, and I'm logged in remotely and I'm looking at it with them and I'm trying to help them and I'm seeing the writing on the wall. And so I said to this guy, and this is a brand new business, so really low activity. So this is where I made an exception. I wasn't going to charge him $500 per month because really simple, not many transactions each month, and I know I'm going against everything I just said. But the bottom line is I knew in this case, again, because of the speed with which I can do things, the efficiency, I knew I didn't need to charge him $6,000. So I gave him a quote of something much lower than that because I knew it would be fair both ways in terms of the value and everything. And he instantly agreed. Not only did he agree, he was relieved. He said, Seth, thank you so much. This is so much better. It was clear he didn't want to learn how to do this stuff. He just didn't think he had any other choice. Right? So now what I'm going to do is I'm going to clean the books up for him, and then I'm going to say, how about $500 a month ongoing? We'll keep this going for you. You don't have to worry about it. You just get your product sold, and we'll count the money, right? That's how I sell this stuff to people.
So I want to interrupt you for just a second. Alexa Gregory's on Facebook. She got the balance sheet quiz correct.
Uh-huh.
And Sarah Prevost says, take the BS before the PL. Yeah.
Right.
Just get the BS out of the way.
Yeah, I didn't want to interrupt you because you're on your thing going on.
No, you should always interrupt me.
Fine.
That way you can
I
take a
wanted to
breath.
hear what you had to say.
It's
Right.
good to breathe.
And now I'm looking at Facebook. JC Preciado says, great info, 100%.
I have a question.
Okay.
Hello, everyone. It's been a while. I know.
Hi, Kelly.
Hello. This has come up because I am working with CPAs that are preparing the tax returns for the bookkeeping clients that I have. And I had a conversation with one of the CPAs the other day, and he's like a magician at figuring out how to work on the tax avoidance scheduling. And it's, when I say it, not evasion, avoidance, finding ways that are crafty. So he has a very tangible product where he says, hey, I saved you $12,000 in taxes this year by you working with me. Mm-hmm. I don't know that story for the bookkeeping piece because I don't, it's like maybe, as you've talked about, I need to work on selling more value in, but when I have small clients that actually probably just don't care. They're only getting it done to get their taxes prepared. So I'm just kind of wondering how to build in, I understand the value, but they don't really see it. And I'm trying to find better ways to articulate it because, maybe just small stories, if anybody's had a good experience with that.
This conversation came up recently in our 97 and up group. And so here's I have a couple of answers to that. First of all, there's other ways you can define the value, and I'll get into that in a minute. But first, I'm not going to spend too much of my own time and energy trying to convince the client of the value. I know what the value is. I know what's going to get me excited to do the work. If they don't see it, I'm not wasting my time with them. I'm going to move on to the next one. All right. So that's kind of part one to my answer. Don't waste too much time trying to convince them of the value. If they can't see it, it's going to be really hard to convince them of it. That said, there are ways, because yes, with the tax part, it's very easy to show them, I saved you this much in taxes. Here's what you were going to pay. Here's what you paid. Here's the difference. Very easy to illustrate that. The ways that I would try and establish value, and unfortunately it's hard to prove until after you've done the work, but same with the tax situation, right? You have to get them to give their confidence in you and try you out for a year. But recently, one example of this is I had a client who a couple years back, we had our little meeting at the beginning of the year and established what some of the goals were. One of the concerns the client had was he had about $500,000 in a savings, and it had bled because they kept having to pull money out of it to feed the business to cover working capital needs. Meanwhile, after a quick analysis of their situation, receivables were growing. And I said, this is your problem. You're not collecting, and instead of collecting, you're enabling your clients by pulling your own money out and putting it into the business so that your clients don't have to pay you, right? And so a little bit of an analysis quickly gave us a strategy and a solution. And sure enough, I asked Erica recently to pull up the balance sheet and tell me where that savings account was at. It's right back up to the $500,000 where it was. By the time we had that conversation, it was down to about $100,000 left. And they were very nervous. We're bleeding our savings. And this guy who runs this company was at an age where he's trying to move towards retirement, and he's going in the opposite direction from that, right? So there was a very quantifiable goal that we were able to achieve by being able to show them, hey, we were able to help you recover that savings, right? And now keep going in the right direction. We'll be able to exceed it, right? Now the next goal milestone will be let's grow it to $1 million. Instead of just $500,000, right? So that's how you have to just establish quantifiable goals with them. And sometimes setting money aside and saving money and retaining the earnings, right? You know that term, retained earnings, right? Retaining the earnings in the company is the best way that you can provide and add value for people.
So I want to answer that question, Seth, please. I want to say baby steps. Just have the client, just work with the client the way you normally do with your higher, I'm going to say higher standards. Things will come up in business where, you'll be able to help them out a little bit here, a little bit there. I just had a client tell me, You know what? It's the end of the year. I am so happy that you are with me. I have never had an easier end of year with my accountant.
Mm-hmm. I had a client say something very similar to me. In fact, I posted about it on social media because I was so proud when he said this to me. He says, I used to dread year end.
That's the other side of, you know what, working with someone that really wants to work with you.
Yeah. Yeah. So there you have it, Kelly. I mean, again, it's you have to establish quantifiable goals and milestones that you can achieve with them, right? And the first thing is you can say to them, hey, look, I'm going to take this off your plate. I'm going to handle this for you so you can go run and grow your business. Another benchmark you can look at after you've been doing it for a year is just run the analytics, right? How profitable were you before I got here? How profitable are you now? Now, maybe you can't take all the credit for that. Maybe some credit goes to them, but you certainly can take some of the credit and say, I helped free you up to do the things you did to make this happen. So I get to take some of the credit, right?
I think the one I have the biggest issue with is the one that is wanted the bookkeeping to just do everything. Like she doesn't have to deal with anything anymore. And really, I've learned from that first engagement that, sorry about that. I learned from that first engagement that I need to let them know up front that they aren't able to just hand over the papers and walk away. They're going to need to engage at some level each month because they have the information and I don't have that available. So I learned a lot from that. I mean, that's kind of a rookie mistake, I guess. But
well, no, it wasn't necessarily a mistake because you can take all of that on for them. You just have to price it accordingly, right? If you're going to have to put in all this time and energy to pay their bills for them, to do their invoices for them, you have to build that stuff into your pricing. So like I said, the base fee might be $500 per month, but then if they want me to do bill pay, that's at least another $500 per month just for bill pay because it's a lot of work to manage that for somebody. If they want me to do their invoicing for them, another $500 a month because that's also, it's just labor intensive. It eats up a lot of my resources that I can't now use elsewhere on other clients, right, to earn other fees. So that's what I have to consider. So again, you can do that stuff for them, but you have to price accordingly, right? That's the whole key. All right, Larry says in the chat, he says, let's see the magic. You guys ready for the magic? All right. Let's look at some magic. So first things first, like I said, I've got it narrowed down to pretty much I'll do it for $500 per month of cleanup. But before I got it to that, and I think what happened is doing what I'm about to show you was my process for a long time, is how eventually after doing it the way I'm going to show you now for so long, I eventually settled in on, you know what, if I round it up a little bit, beyond what most of my jobs have been, roughly, it comes to $500 a month, which, wouldn't you know, that's what I charge for my lowest end sort of client, right? So again, checklist, balance sheet. Run the balance sheet. The balance sheet is your best friend. All right, in this case, because it's the sample file, I'm just going to run it for all dates. Not that it really matters, but well, it only matters in this case because I want to make sure we have the maximum number sort of accounts showing up here on the books. All right, I'm going to export this to Excel because now we're going to have some fun. This is the fun part. And normally, today I won't in the interest of time, but normally I would convert this to Google Sheets because I live in Google Sheets. And you know, this is what we're about to do is use the balance sheet to create an estimate. Because the balance sheet is, as we've all now established, that is our checklist. The balance sheet describes all the things that I have to manage for this client, right? I have to manage their bank accounts. I have to manage their accounts receivable. If this client has inventory, that's another thing I've got to manage for them. I've got to make sure they're counting their inventory. I've got to post the adjustments for that inventory. I've got to run reports, make sure things aren't going negative. There's things that need to be done in order to manage this inventory. What we're doing here when we're doing a cleanup job, and then beyond that, when we're maintaining the books, is we're managing this balance sheet. We're making sure these numbers are accurate, right? That's what we do when we audit a company. I got my whole process out of the audit process that I do. Because I said to myself, if I can take what I learned to do as an auditor, auditing a company's financial statements, simplify it a bit, and apply that process to a small business's set of books, that's setting a pretty high standard, which is exactly what I want to establish for how to put together a company set of books, right? not a publicly traded company, don't need to go to this extent, but doing it is how I sort of justify the fact that I am better than the average, that you are paying me more because I am doing this job right, right? And with me at the helm, with me doing this stuff, you don't have to worry about it because I'm doing this stuff to a standard that very few others are going to do, right? A lot of others in the profession, frankly, don't have the experience to know how to do it the way I do it, the way I manage it by the balance sheet. But in reality, it's not, you don't have to have an accounting degree to know how to do what I'm about to walk through, right? All you have to do is have a little bit of common sense and the basic knowledge foundation of bookkeeping and accounting so that I can understand what it means to make sure that a bank account balance is accurate. Simple process. Is it reconciled? If I go through, do I see plugged numbers? If I see plugged numbers, that's a red flag. If I see too much of that kind of stuff, I'm going to do what I said I just did with a client. I'm going to go delete every single transaction back to the beginning of the year that I'm trying to reconstruct. Sometimes it's just easier to reconstruct than to clean up, right? A lot of times I'll say. The other thing to keep in mind, because the question comes up, how far back do I go? Simple answer. When was the last return filed? We're going to book that balance sheet. That's our starting point. And if there already is a balance sheet, I have a whole process and a template that I sell, right, for how you can go through, compare the trial balance in QuickBooks as of the end of that year end to what's on the tax return. And the template helps you calculate the journal entry that you can post to get the books into 100% agreement with the tax return, right? It's flawless. It will match to the penny. Retained earnings in the balance sheet on the tax return will exactly match QuickBooks when I apply this process. So that's where that's how far back I go. No need to clean up something where a return's already been filed. Somebody else has already submitted work to the government that they're willing to stand behind, right? So I'm going to just defer to that, and I'm not going to waste time nor the client's money trying to change that because that would mean amending the return or something, right? Not going to do it unless there's a good reason why we have to.
And Hector Garcia says, great stuff, Seth.
Thank you, Hector. So everything I have to manage needs to get some kind of a weight factor, right? We're going to give it weight points. And it's, for the most part, it's simple. Either I have to manage it so it gets a 1, or there's really nothing to manage so it gets a 0, right? Plain and simple. I got a bank account. That bank account needs to be reconciled. Now, careful here, because I know what some of you are thinking. Oh, well, the savings has no activity. Maybe there's one interest posting a month. I don't care, right? I still have to watch it. I still have to make sure that there isn't something more than that interest payment every month. It's still getting weighted with the number 1. Accounts receivable, definitely something that has to be managed. Even if I'm not doing their invoicing for them, still got to run the reports, make them aware when people haven't paid before receivables get too old. Because guess who's going to get blamed if a receivable gets really old and they can't collect it now, right? So I've got to take responsibility for that. Inventory for sure. Undeposited funds, no. Why? Because maybe I have to clean it up once, right? But undeposited funds to me is a cash equivalent. It goes back, it ties right back to the bank accounts. So I'm not necessarily inclined. What I will do, just to be sure about this 0 here, is I might go into the QuickBooks file and go to make a deposit and see. If there's a big clunky mess of crap in there from a year back, okay, then we're giving this a weight of 1 because I got to clean that up. But it should only need to be cleaned up once, right? Okay, fixed assets, I generally don't weight because there generally isn't anything to do with a fixed asset other than when you agree the books to the tax return to make sure the right depreciation is there, right? And to make sure that that's booked. So I generally will not weight the fixed assets unless for some reason the nature of the client's business is such that there's a lot of fixed asset activity. Then maybe I'll give it a weight, or again, if I think there's a lot of cleanup. But generally speaking, I will not weigh this in because there's usually nothing to do here other than, like I said, just compare it to the tax return, right?
Depends on the kind of client. If you're talking contractors or lawn people, they have equipment that comes in every year. So you do have to look at equipment. You do have to look at office supplies and make sure that there's no assets stuck in those accounts.
Right, exactly what I said. It depends on the nature of their business. Most of the time, it's not going to get a weight. But yes, if there's a lot of fixed assets being bought because the equipment is the nature of how they earn their revenue, then yes, of course, we'll weight that. But the truth is, even then, all I'm going to do is run a report at year end, drilling into the total fixed asset amount from the balance sheet. And if you run that report for just the last year, then you can see where all the new purchases are. And I'm pretty much going to send that to the CPA or whoever's doing the tax return and say, here are the new purchases. You put it into the schedule. Give me the depreciation entry. So even then, not really a lot of work to do, right? just because somebody else is going to give me the depreciation entries, I'm just going to book it. How long does it take to debit depreciation expense and credit accumulated depreciation, right? So that's kind of my philosophy. But I agree with you, Gina. If they're in a business where equipment is something they do have to buy regularly and there's a lot of turnover, then I will weight that. Especially if there's a lot of dispositions. That's where it gets tricky, when you have to record the disposition or disposal of an asset, because now you have to recapture depreciation, calculate the gain or loss on that disposal. That's where it gets tricky. But if it's really just purchases and depreciation, not much to manage there, right? And remember, that's what we're analyzing here is, what do I have to really manage here in order to get these books clean and then keep them there, right? Credit card, definitely giving that a weight. It's just like a bank account, right? We have sales tax, definitely weighing that in. All right, a loan I often won't weigh, because loans should be pretty simple and straightforward. I'm just going to check that we're doing the proper bookkeeping on interest and principal, right? So maybe I'll weigh it, maybe I won't. And sometimes I'll weigh it, but then that's a factor. I can remove that weight if, when I come up with my estimate, I feel like it might be a little too high. That's where I can pull something, right? Excuse me. So when in doubt, I might weigh it in, and then I can always zero it out later. So I'll weigh in the long-term note payable as well. Again, usually long-term notes, not much to do. There's just payments being made every month, right? So I may not. But again, as a default, weigh it in. You can always remove it later. Equity, nothing to do. I never put any weight on anything in the equity section. You know, unless we're dealing, again, there's always exceptions. If I have a partnership with 3 partners and I have to manage the capital distributions to their different partner capital accounts, another story, right? But most of the time, I don't give any weight to anything on in the equity section. So there's our weight, and then we need a rate. What are we charging for each month for each thing we have to manage? I'm just going to throw a number in here, and let's call it $125. Might be an hourly rate that you would charge if you were charging by the hour, but we don't want to talk about hourly, right? It's just, this is what I want to get paid to manage this thing. I want to get paid $125 per month to manage their accounts payable. You know, that really is how I look at this. Same with the credit card. Boom, boom, boom. Right? And again, nothing here. And now let's do the math. I'll just say EST for estimate. We're going to take the weight times the rate. This one I'll just copy straight down. All right, let's get a total. So this one would come out to $1,250 a month, right? Remember, these are monthly. This is, so in my case, if I was doing this as an ongoing quote for a client, I would probably round this up and say $1,500 a month, right? Now that's $20,000 to clean up their books. If that seems like a lot, then this is where you go back and say, well, again, loans, probably not much to manage. And you don't do this in front of the client. You don't want the client to see you second guessing yourself, right? This is done in private. I just want to make sure that's clear. All right, I might say I'm never going to take a weight out for a credit card or a bank account for sure. I might take out undeposited funds, right? Everything else I still kind of want to leave in here.
So I want to ask you, Seth, while you're doing that, invoicing and accounts payable, how much of the invoicing and accounts payable are you doing? Are you creating invoices?
No.
Or,
no,
okay.
That's what I said earlier. If somebody wants me to actually produce invoices and send them out to their clients on their behalf, that becomes very labor intensive, because there's no way to do that without having a lot of intervention on the client's part. And in my experience, it amounts to a lot of back and forth where the client has, and here's what always happens. And I mean always, every single time, never been an exception. Anytime I've ever done this for a client, which is why I really shy away from doing it. I really don't want to do it. So if they do insist on me doing it, I'm going to make them pay for it, right? But what happens is, so the client gives me the sort of framework for how to go about producing the invoice. I produce the invoice, give it to the client for approval. Really easy to set up systems for this, by the way. A while back in 97 and up, I taught everybody a process that I developed using Smartsheet, where especially in QBO, I can actually put a link on a line item in a Smartsheet project that goes to that live invoice in QBO, so the client can click over to it and see that live invoice, and then they're going to give me some changes, and I can make those changes and say, click that same link. It's still to the same live invoice, so the changes will be reflected there. So there's no emailing back and forth. It cuts down on a lot of the friction. But what happens invariably is then the client says to me, okay, well, I want to change this in the description. So I say, give me the exact verbatim description you want in there, and I will copy and paste it into the invoice, right? And so I copy and paste it into the invoice, and guess what happens? Still not right. You know, even though I did exactly what they gave me, and this always goes on, and it's excruciating, and it takes hours every month to get their invoice done, and I don't want to do it. So I really won't do it if they want me to do their invoice. So when I wait this accounts receivable, it's really just this just accounts for the process of looking at the aging and keeping the client informed about when it looks like invoices are going late. That's what I manage in accounts receivable for a client. If they want me to do invoicing for them, it's an extra $500 a month just for that, because of all the headaches that go with doing that for a client, right? Accounts payable, same idea. If they want me to do bill pay for them, at this point in our pricing table on my website, I won't even consider bill pay unless they're at a level where they're paying us at least $2,500 a month, right? Well, I used to do it at $1,500 a month, used to include it. Then I said, well, we'll add $500 a month on top of the $1,500 if they want it at that level. Then I eliminated the whole $1,500 a month plan in it. So now it's, you know, they got to go to $2,500 a month. Then we'll do the bill pay for them at that level, right? Because they got to be paying us that much for it to be worth our while to do it, right? This is my whole view on it. They need to pay me what's worth my while to do the work. I don't care what the value is to them. But this is the process. So I, you know, in this case, I would give the client a quote, and assuming I was comfortable backing off where I backed off, so it's $1,000 a month. This is what I would quote them: $1,000 a month for the cleanup, and then $1,000 a month going forward to keep it up. And again, if they balk on the cleanup, what they'll, you know, what I'll say to them is, actually, the cleanup should cost more. This is what I'm going to charge you for the ongoing. So it's just that I'm not charging you the premium I should be for the cleanup, because that's always harder to do, right? So I stand firm on that. JC is in the chat. He says, Seth, do you suggest different invoicing programs when you log in to enter into QB? If so, no, I just use QuickBooks Online to do the invoicing. That works fine. I don't see any reason to use any other invoicing program.
I use Bill.com sometimes.
See, I've never invoiced out of Bill.com, but I get that, you know.
Same for billing, yeah, or paying bills. Bill.com does automate the process, and it does make it much, much easier.
It does. You know what it is with Bill.com? I just don't like their templates, I think, is what that came down to. All right, so for some reason, I can't find my chat window here from Zoom. I just saw somebody posted it in the Zoom chat. Let me.
Okay, Alexa, seems like you will always come out at least $1,000. How do you get to 500? Has to be some weighing on volume of transactions or dollar volume. Again,
nothing to do with either. It's just what I have to manage for the client. And no, a lot of times, you know, let's look at that for a minute. A lot of times I don't have sales tax, right? And I don't necessarily always do it on the basis of 125. It could be on the basis of 85. You know, I just threw that number out there. But let's say I don't have sales tax. Let's say I don't have a loan payable here, right? So I have just a credit card, accounts payable, right, and a couple of bank accounts, right, accounts receivable. Let's say there wasn't any inventory. Again, simple business, right? Inventory right away adds a lot of complexity to it. So if I eliminate some of those things that, you know, often don't show up, now we're a lot closer to my $500 a month, right? Again, and this is designed to get me paid well. We have to stop being so afraid to ask the clients for money. We deserve to get paid well to do this. We have lots of experience and expertise. Don't be afraid to ask for $1,000 a month, right? That's the thing. We're so scared. We're like scaredy cats. We're so afraid to ask for money. You know?
So if you have that client that doesn't pay the $1,000 and you feel like you're not doing anything, it leaves room for the client that will pay that $1,000.
Absolutely. Absolutely. And because keep in mind, you know, when we're doing this, and it's funny, we're almost out of time. I got to get into showing you the cleanup part, the actual work. And it's really, I don't need a lot of time. I'm just going to show you what my process is for how I'm kind of setting up the whole cleanup part. And you'll see, I think you'll get it right away, how you can make this happen super fast, right? And the more efficient I can get, if we want to talk about hourly, the higher my effective hourly rate goes when I'm charging a flat fee, right? But again, it's not about the hours. It's about the fact that I'm going to really enjoy doing the work, and I'm going to really be excited about what I'm getting paid to do that work, right? So, and going back to Alexa's last question, I just want to reiterate, so be it if every job is $1,000 a month. You know what? I haven't said this yet, but it just occurred to me while I was talking this morning that I have actually gone into my website about a week ago and I increased my lowest tier. It's now $1,000 a month. Because I talked to somebody who's doing over $1 million a year, who does taxes. And she said to me, she said, Seth, you're insane. She says, somebody like you should never be charging less than $1,000 a month. And she made an impression on me. And I thought about it and I said, you know what? She's right. There's no way I should be doing something for less than $1,000 a month for a client. If that means like you just said, Gina, if that means I pass up some clients, that's exactly what it is. It makes room for the clients who value what I'm doing so much that when I say $1,000 a month, they're like, damn, that's cheap. I would have paid $2,000, right? That's the idea. That's who we want to go for. We want to stop wasting our time with these people who are going to nickel and dime us. You know, when we deserve to get paid well, we work hard. Every time I talk to people who are, especially this time of year, like, oh, I'm working 80 hours. I'm getting up at 5 in the morning and I'm not coming home till 10 at night. I'm like, you're doing something wrong. I don't work those kind of hours. Haven't in years, right? If you're working those kind of hours, then you are definitely not charging enough. Double your rates, lose half your clients. You'll make the same amount of money working half the time. Right? And I'm serious. I'm dead serious about that. We do not charge enough as a profession. I see it all over the place. And we all work so hard because we want to be nice. We want to be people pleasers. You know what the problem is with people pleasers? Everybody likes us but us.
The other thing is there is always going to be somebody that charges less than you.
Mm-hmm.
I mean, that's something to think about. You know, you're not going to lower your price to the point where they'll eventually take you because no one else is going to do it for that price. No, there's always someone that'll do it for less than what you'll do it. You have to have your value in place to know what you're worth.
Yep. Again, nobody else is going to value as much as you value yourself. Right? And I've told the story. I'll tell it again to underscore this point. Years ago, I had a client. I met with him. He was local. I met him at this hotel in Hollywood in the lobby, and because his office was like on the outskirts around this hotel. And he was like, at the time I was charging $40 an hour doing bookkeeping. I was living in a little apartment in Hollywood, and I was just getting started out. And during the interview, he said, is there any flexibility on the rate? And I said, no. I said, to be honest, I'm so busy at this rate, the last thing I can do is lower it. I said, if anything, I'm about to increase the rate, right? Which was my way of, so what somebody's doing in that case, if we want to talk about like the art of negotiation, what somebody's doing in that case is they're trying to get me to second guess myself and think, oh man, if I don't lower my rate, I'm not going to get this business, right? And it works. It's effective. It gets a lot of us to come down on our rates and do the work for less than we should when we're already doing it for less than we should. Now we're going to go even lower, right? But I flipped that coin on him right away. Again, art of negotiation. I flipped it around on him immediately by saying, not only can I go down, if anything, I'm about to go up. So you better hire me at this rate quickly because pretty soon it's going to cost more, right? That's how you turn it around on them when they try and pull that crap with you. Later on, after he'd hired me at the $40 an hour, he told me, he says, by the way, I want to let you know, he says, after meeting with you, I went back to talk with my business partner and told him this guy must be really good because he wasn't willing to budge on his rate. Again, if you start second guessing on your rate and letting them see that, they're going to translate that into the value of the kind of work you do. How good are you at your job, right? They immediately make that equation happen, right? If you're not really confident in what you're charging, the opposite of that, that's the opposite. If you're not really confident in what you're charging, you must not be that great at what you do, right? So that's the question of, do I want to just get the cheap way out so I don't have to pay a lot for this, And again, you're getting at, does the client value what you're going to be doing for them? Or do they just need a tax return done? In which case, you probably don't want the client, right?
JC says, oh man, love it.
Yep. Unless that's the kind of client you do want, right? Maybe that's what you want to do is just a simple set of books, charge $350 a month and get their books compiled so they can get a return done. You don't really care about the analytics. You don't really care about looking at ratios and all of that. That might be your business model and that's okay. But just be clear on that and then be firm about that if that's the model you want to go after, right? All right, let's look at this. So I've got up on my screen. I looked through this earlier because this is a cleanup job I took on recently. So this is a real company file. I always ask them when I start the cleanup job, I want all the PDFs of every bank statement, and then I want a CSV file. And I tell them, I don't care if the CSV file is by month or if it's the whole year. In this case, I got the whole year, and this is exactly what it looked like. I looked through the file before I planned to present it publicly to make sure there's nothing sort of identifying about the client or anything, and there's not. So rest assured, I'm not being, what's the word? I'm not being cavalier about my client's information. I checked, there's nothing in here. But, and what it's going to come down to is this. I said earlier, the most recent cleanup job I took on, after I saw what a mess it was, I went in and wiped everything that was in that QuickBooks company. I'm starting from ground zero, and I'm reconstructing. One of the reasons I would suggest leaning in that direction in the first place is it's so much easier now, because in this CSV file, I've got his whole year from his bank account, which is where most of the activity is. Then there's a credit card account. There'll be a little bit more, and I'm going to do the same process. But what you're going to see is I'm going to start the process here for you in the few minutes we have left of how I start cleaning this up and cutting it up and getting it ready to be imported. And then once I'm ready for import, it's about 3 clicks using SASANT. It's what I demonstrated at QuickBooks Connect this year. In 3 clicks, this will all get imported with the right payee, with the account coded, right? If there's splits, I'll have to go back through and do the splits. Fine, there's ways for me to track that easily enough. But the bottom line is once I finish prepping this file, the import will take 3 minutes and the reconciliations will all be 2 clicks because all I have in there is exactly what cleared the bank account every month. So literally the reconciliation is put in the ending balance, choose select all, choose finish. That's the reconciliation process when you've imported everything exactly as it came through on the bank. That's one of the other benefits of just cleaning out any of the garbage that was in there before, because now I only have stuff that cleared, right? And this is a much faster way than even hooking up the bank feeds and trying to do it retroactively, because in the bank feeds, even with rules, I still have to go 1 transaction at a time to code stuff. Here, you're going to see in a few minutes how quickly I can code a whole year, right? This will take me less than 1 hour to get a year done, right? And coded, ready for import, confirm a few and categorize things with the client, and then hit go on the import. Now, this is for QuickBooks Online. I'm waiting and begging our friend Matthew to finish some kind of integration with VendorSync for QBO, because with VendorSync in the mix, and if you're doing this for desktop, you got to do VendorSync, because VendorSync is going to do what I'm about to show you in a fraction of the time that it's even going to take me to do this, right? So I'm giving my friend Matthew a plug here. Go sign up for VendorSync. If you still have desktop clients, or if you're doing a desktop cleanup job, you need VendorSync. So here's, watch this. Notice what's really annoying about this file is every other line is blank, right? So even trying to select the whole thing, as you can see, is even with Control-Shift-Down arrow, it's clunky, right? But here's what I can do. And again, this is where it's important to get the Excel skills. This is why I'm so hell-bent on telling people you still need to learn Excel and get better at it, because the better you are at Excel, the more efficient you're going to be about doing exactly stuff like this, right? I'm looking at the chat. Linda says, I might need to save this one as a pep talk when I start to feel bad with the pricing. Good. All right, so I'm highlighting all the columns across. Shift page down does a large scroll to get me quickly down to the bottom of the file. Pay attention to the scroll bar here, because the scroll bar indicates how far you are down to the end of the actual data, not the whole spreadsheet, right? So that's how you kind of know where to stop. Okay, so I went a little bit past it. Here I am. I found the bottom. Data sort will get rid of all my blank rows in an instant. Right? Make sure you click off that your data has headers. If you're seeing column letters here, change it. Click off my data has headers. I'm going to sort it by date. Instantly, I've got a straight up table with just transactions, no blank lines in between. That's step 1. That's unique to this particular download because they had all those blank lines. The point is you want to get this to what's called a flat file, right? Where I just have rows and columns. Okay? Now Control-Shift-Right, Control-Shift-Down. Now I've got the whole range selected for sure, nothing more. Control-T is in table. We'll convert this to a table. Okay. Control-Spacebar over on the memo column. Control-Shift+ twice. QuickBooks Payee. QuickBooks Account. This is what I have to fill in to prepare this for import. I need to know who the payee is going to be and what account it is. Okay, and yes, I know we have deposits too. That's going to be dealt with a little bit differently. Let's format my numbers like numbers. Then I'm going to sort by name, because that's going to group the descriptions together where the names are as consistent as I can get them, so I can start filling it in. right? So here's checks. When I get this, I send this list to the client. I say, I need copies of every one of these checks. Look how fast that is. In one shot, I've got the whole year's worth of checks that I need copies of so I can code those. Okay. Here we have, and look, pay attention. Here we have amounts that are negative. These are outgoing amounts, right, to Shopify. These are Shopify fees. This person sells on Shopify. Okay. So the pay is going to be Shopify. And mind you, while I'm doing this, I have his QuickBooks Online company open. So if I need to, I'll add the payee as I create it. But now I can quickly copy and paste that down, right? Now, keep in mind, see here I have Amazon Prime, and then I have Amazon Prime as one word, right? There's going to be kind of different versions of names. This is where my filters come in. And they're not always going to be adjacent, right? Because another version of a transaction with Amazon might have something else so in the beginning, so it might be further down the list. So I'm going to use my filter. I'm going to type just the word Amazon because that's the one thing that's common to all of it. Hit enter. Now I have all the stuff that I want going to Amazon. Okay, and I can paste this all the way down. Up here, select visible cells only, otherwise I'm pasting into the stuff that's hidden in between. Right? And then the account. Now, Prime might be a membership thing. I might have to deal with the client a little bit on this stuff. And I might just for now stick them in office expenses, and then I can sort it out from there with the client. The client may have to go through in a case like Amazon and actually look up the orders and see what was computer equipment or what might have been something else. Right? So this is how you can quickly get the year coded. I'm not kidding. This took me less than an hour to get the whole thing coded. Right? Because using that the search and the filter, I can quickly isolate the things that are going to get named. Here's GoShippo, right? Which is a shipping tool that a lot of e-commerce companies use. Notice I'm clicking into the description to copy it exactly as it appears. So I can go back into my filter, paste that in. And now in a click, I can make the name GoShippo. Right, and Excel skills come in handy. Control down arrow to get to the bottom of that range. Control Shift up arrow to get everything selected. Select visible cells. Control V as in Victor. So I'm only pasting in on the lines that are visible. And then I can clean this out. So you can see how this can start to go very quickly. Mind you, I'm paying attention. What I'll share with you that I encountered with this file is at one point as I was getting it down to the last few where they were like just one-offs, is I said to the client, I noticed something about a line of credit. But in the statements he gave me, I didn't see any lines of credit. So I asked him, I had the client in Slack already, part of my process, you all know that. So I asked him, and I said, what's the deal? Is there a line of credit I need statements for? He says, no, actually, that's a personal line of credit. We just borrowed against that to put money in the business. It was with the same bank, so it just shows up as a transfer. So I said, oh, so I'm going to show that as a contribution from you to the business. Right? And that brought up the next important question for setting up a company and cleaning up a company, which was, by the way, are you the only
Seth, we lost you. What's happening? Can't hear.
Okay, you can hear me now?
Yes.
Okay. So what I was saying is this is a file that was originally set up by another accountant. I took over because the other accountant actually threw their hands up and said, I can't do this. I don't know how to do this kind of company, right? So as I'm going through, I saw the line of credit and I said, where is this from? He explained it's a personal line of credit that they drew on with the same bank and put the money into the company. I said, okay, so that's a loan from you as the owner into the company, which made me think, by the way, let me go into the QBO file and go into the company setup because I wasn't aware yet. I hadn't thought about it. Are they a corp, a C corp, an S corp, an LLC? And I looked, and that information wasn't even put into QuickBooks. So the previous accountant didn't even bother to ask, right? So I went and asked him, and I said, hey, by the way, what kind of a legal entity you set up? He says, oh, it's an LLC. Great. How many members? 3. Oh, shit, we got to set up the equity section right. I got 3 different members I need capital accounts for. Right? And so I went and built that all out in this chart of accounts. And now, I said, so whom should I assume made this contribution from the line of credit? Would that be you? He confirmed, yes, great. So that's going to show as a contribution into his member equity section in the equity section of the balance sheet. These are such important details. I can't have a properly compiled balance sheet if I don't have this information so I know how to present what I've uncovered in the banking here. right? And this is how I do a cleanup job. And like I said, less than an hour to code an entire year's worth of bookkeeping. Do the import. Each month will be reconciled in less than 30 seconds because you've done the prep work, because you've got the Excel skills to do it, right? I can't stress enough how important that is. I don't care what apps are out there. I don't care how sophisticated it's gotten. Nothing, and I will challenge anyone to defy me on this, nothing will be as efficient as this kind of a process in Excel when I have to code a large volume of transactions like that. Once I'm caught up and cleaned up, sure, then I just code the bank feeds and start using rules and employ the process that's needed. So, so that's different once we're caught up. But to do a cleanup job, to get it done quickly and efficiently, this is how, in my opinion, you have to do it. It will be so much faster, so much cleaner. Before I go to do the import, I get to work with the client and say, because I've marked a bunch of things in that QuickBooks account column as uncategorized, and now I can just carve out that piece of it, send it to the client. And, Alexa says, I missed how you got all the info into Excel. Yes, a CSV file from the bank. That's exactly what that is. Earlier, I actually requested that from the client. So the client got that for me. In a lot of cases, I'll just get the logins and get it myself. That's usually what I try to do. But this client was a referral from another company, and so I didn't know that I had the comfort level with them. And I always ask them, I say point blank, either get me the statements or give me a login. Either way, I'm happy. Now, when we get to the part where he agrees to do monthly work with me, then I'm going to need the logins. I insist on it, because if I have to rely on the client to get stuff, it's just going to slow me down. And I can't afford to be slowed down. I need to get this stuff done efficiently and with no friction. So that is the story. And Astrid says king of spreadsheets. But you don't have to be a king of spreadsheets to know how to do this stuff. And I can show you, and I'll give you a shameless plug. Just join 97 and up, and we will do it there. And I will give you the skills there, because that's the kind of stuff we do, right? Because you'll come in and you'll say, I have a cleanup job, right? Or just get with me in a one-on-one, but it's a lot less expensive to just join 97 and up, and you can pick up the skills there. So there it is. That's my shameless plug. When all is said and done, join 97 and up. I can give you the tools you need to get this stuff done quickly and efficiently and help you. We got in Melissa, who's one of our members, who's not here with us today. She came in once, says, I have an estimate to do for a client. I have no idea where to start. The group of us worked with her and built the estimate, which she sent to the client and got the job. So, and again, so Linda, you want the pep talk? Linda's a member, right? This is what we do every Tuesday and Thursday. So join us. We're out of time. I got to run. I got to go to the Huntington Library because a bunch of us are meeting over there in about an hour. So I'm going to head over there. I hope you all enjoyed this, got something out of it, learned something, had some fun. Quick look over. Keisha says, what's 97 and up? Will somebody please post in a link and give her that information? I would normally hang around and do it, but I've got to run. 97 and up, real quick, Keisha, is my mentor program where I work with other bookkeepers and accountants to help them start or restart and build and run and grow your practice. We have a whole process for setting goals, both in terms of financial and time management, and then teach you all the skills you need to learn the apps you need to learn, to run things that you need to run, to manage your processes and workflows, everything you need to build that business. I provide you with the resources to do it. So in a very quick nutshell, that's what 97 and up is. There's a whole course. And Linda put it in the chat for Zoom. And if somebody could put it in the Facebook live feed chat, or just get with me through my website. And of course, I'll be happy to get back with you later. But like I said, I do need to run really quickly. I'm going to be late. I don't want to be late.
Bye, Seth. Have fun. Enjoy.
Bye.
See you same time, same place next week.